Today, I'm taking a look at a stock, or rather, a company, for you that has a net margin of about 30%, so a very, very strong market position, and at the same time, a very low valuation. And the company I'm talking about is Kaspi, a Kazakhstani company that might not be as well known everywhere and hasn't gotten as much press coverage as some other companies, but for that reason, its valuation is significantly more attractive. I also have this company in my own portfolio, and in this video, I'll explain why I'm invested, as well as what risks are involved. So, what does Kaspi do? Kaspi has three business segments: payments, marketplace, and fintech. And in all three areas, they are number one in Kazakhstan. So they really have an excellent market position here, and we'll see later on what kind of impact this has on their financial figures. And they're known for their super app, because this super app combines everything you actually need into a single app. So you can shop there. It's similar to Amazon, basically integrated right into the app. But you can also use maps, for example, similar to Google Maps, a messenger comparable to WhatsApp, of course banking services, fintech features, and other things like booking flight tickets. You can even communicate with government authorities and apply for certain documents or upload your own files that the authorities need, and much, much more, all combined in a single app. And that's why this app is by far the most popular app in Kazakhstan, and almost every resident in Kazakhstan has it. Recently, they also announced that they are now partnering with Alipay. So now, you also have the option to pay with Alipay in Kazakhstan, which really shows just how important and how good this app actually is. And in addition to this business in Kazakhstan, at the beginning of this year they acquired, or rather took a large stake in, Hepsiburada. And that's actually a similar business model, just in Turkey. And they bought 65% of this company for a total of $1.1 billion. $600 million of that has already been paid in cash, and the remaining $526 million are due within 6 months. That's noted down here, and specifically after January 29th, so by the end of July. That means the remaining roughly $500 million has now also been paid, so this deal is now fully completed. And as you can see here, Hepsiburada also has an app with a lot of features like a marketplace and so on in Turkey. But let's get back to Kaspi. It's also very positive to note about Kaspi that the two founders, shown here, are still actively involved in operations. One of them, Kim, is still the chairman of the board of directors, and the other is still the CEO. So both of them hold very, very important positions here. And not only that, both of them also still own about 20% of Kaspi shares each. One owns 21% and the other 23%. The rest of the management team owns another 4%, so together they own almost half of all the shares. And that's a sign that they're also thinking long-term like shareholders, that they're focused on the long-term operational business and not just trying to make short-term results look good. And of course, that's also very good for shareholders, especially for us value investors. And if you like my videos and find them valuable, feel free to leave a like for the algorithm. That would be a huge favor to me. Thank you very much for that. Now let's take a look at what the stock price has been doing recently. Here you can see the price since the beginning of 2024. We can see that it first went up from about $90 to $140, so that's over a 50% increase in just half a year. And since that high in July 2024, it's been going down for over a year now, and is currently at $74. That's a 50% loss. And as you can see here, at these dashed lines, those are the points where I kept buying in. That means the first time was here at $111. That was at the end of last year. Then I kept buying more from time to time, and most recently, I increased my position again at around $80. And now we've dropped even further, and for a value investor, that's an opportunity to keep buying if the operational outlook hasn't significantly worsened. And whether I buy more, you'll see in my next update on my community portfolio. There, I invest 1,000 euros every month, and that will also be the topic of my next video. So in October, I'll be investing another 1,000 euros. That means if you don't want to miss it, make sure to subscribe to my channel, turn on notifications, and then you'll be notified when I invest those 1,000 euros again. Maybe part of it in Kaspi, but also in other companies. And then let's take another look at the market capitalization, which is currently around $15 billion, so it's not exactly a small company anymore. For Kazakhstan, of course, it's a very, very large company. And then let's also take a look at the dividends. We can see here that last year there were 4 dividend payments, so quarterly, each time about $1.90, and then twice about $1.70. That means roughly $7 in dividends with a current share price of $74 results in a dividend yield of about 10%. But as you can see here, in 2025 no dividends were paid. And that's not because operating profit collapsed, but because they made the acquisition of Hepsiburada. And they basically said that this year, they would use the profits for this acquisition, wanting to pay for it in cash and not take on a lot of debt as a result. That's why they're skipping the dividend, and as we'll see later, there will be opportunities in the future for dividends to be paid out again. And those could, of course, be relatively high again. Let's take a quick look further, and we see that the current P/E ratio is only 7, and that's for a market leader in their industry. That definitely sounds very interesting and also cheap at first glance. Here we see the 3 business segments and how things looked in quarter 2. And compared to the previous year, the development looks very, very positive. Revenue in the payment segment increased by 16% and net profit even by 19%. In the marketplace segment, revenue grew by 25%, net profit by 13%, and the fintech segment grew by 21% in terms of revenue, while net profit increased significantly less, at 8%. That means a total of 20% revenue growth, 14% growth in net profit, and that sounds even more attractive when you look at the price-earnings ratio of 7. However, there's a small catch, which I'll get to in a moment. And what's also very interesting, and really shows the dominance of this app, is that there were 75 transactions per active user, and that's just in a single quarter. That means each user is actually using this app almost every day. Next, let's take a look at the outlook. How is the business expected to perform this fiscal year? In 2025, net profit is expected to grow by about 15% overall. So, growth is expected to continue at about the same pace as in the previous quarter, and those are really solid growth rates. And here we can already read in this sentence that in 2026, it's expected that the money will not only be used for further growth, but also to give something back to the shareholders. That means there's a pretty good chance that a dividend will be introduced again or that shares will be bought back. Personally, I would prefer that, given the current low share prices, shares are bought back rather than a dividend being paid out. But how it will actually turn out, we'll find out in the coming months. We can see that in the first half of the year, Kaspi generated revenue of $3.4 billion, and from that, just under $1 billion in net profit remained, so net margins of about 30%. And that's fantastic and really shows the company's significant economic moat and its dominant position over competitors, allowing them to charge such high prices, or, of course, high fees, and people still use their app. Of course, the financial situation is also important. Are they perhaps heavily in debt or something like that? We can see here that they have $2 billion in cash, plus another $2.3 billion in investments and derivatives. And on the liabilities side, we see they have $356 million in debt, and here another $662 million in financial liabilities. That means, in total, about $1 billion in financial debt, but $4.4 billion in cash and investments. So, they have a net cash position of about $3.4 billion. Then we still have to subtract the $500 million they just paid as the second installment for the acquisition. But even then, we still end up with just under $3 billion in net cash, which already covers about 20% of the market capitalization. And at the same time, you can see here that the financial situation looks very good right now. So, what's the catch? The catch is, for one, there's very high inflation in Kazakhstan. Here we see the inflation rates for roughly the last 10 years. At one point, it dropped down to 5%, around 2019, but at its peak in 2023, inflation was over 20%. After that, it went back down to about 8%, and now in the last few quarters, it's been rising again. Currently, inflation is at 13%. That means, earlier we saw growth rates of about 15% in net profit. And if we compare that to 13% inflation, it basically means that the effective growth rates, adjusted for inflation, are only around 2 or 3%, which means it's not really such a strong growth company anymore, as one might have originally thought. And we can also see that reflected in the interest rates. Interest rates in Kazakhstan are actually a bit higher, currently at 17% for 10-year government bonds, and as a result, the currency has continued to lose value. Over the past 15 years, there has been a drop of about 70% against the US dollar. So, that's obviously a negative point, but still, you have a company here with a great market position, where growth rates could rise again. At the same time, they still have growth rates even after accounting for inflation. That's still pretty good, especially considering the P/E ratio is only 7. And, as mentioned, we have this fantastic market position. But another risk, for example, is the geopolitical situation. After all, it's a neighboring country to Russia. In Kazakhstan, there's also a government that might come up with the idea that Kaspi's dominance is too great and could introduce sanctions or restrictions so that Kaspi can't operate as a monopoly anymore. So of course there are risks here as well, and that's why I wouldn't put all my money into Kaspi, but in my view, the risk-reward ratio looks good. Another stock that I also have in my portfolio is PayPal. I just recently made a video about them here. Feel free to check that out next, and see you next time with the German Value Investor.